What's up, guys? Welcome back to DCA. So what we did in our last video was we looked at the entire distribution of the holders of Bitcoin. And what we mean by that is we looked at each price for Bitcoin and showed how many coins are being held at that level. And a lot of these coins are being held all the way back to 2010, 2011, 2012. People that have bought at or below $1,000. Okay. So we kind of broke down how this asset is distributed. What we then showed was that when you look at the selling that has been going on over the last month or so, you're seeing that most of our selling is not coming from these long time holders. And what we found is that selling right now is primarily coming from people that bought the top at or near the top. So people that purchased from around 40,000 all the way up to that 69K that we hit back in November. So we were able to show that the primary selling that you're seeing right now is coming from those people that were buying in the bull market, thinking that the price was going higher to these inflated levels that people were, telling you all through the bull market that we were going to go to. Okay. So what we're going to do in this video is take a look at how has the selling played out from these different distributions of holders, so short-term holders and long-term holders in prior markets. So we're talking about the 2013, 2014 cycle, and then the 2017, 2018, and then finally into early 2019. That cycle when we saw these large capitulations, and we're going to look at what the bottom looked like in those scenarios, and we're going to relate that to what we're seeing right now on the network. And we're going to do this analysis today as we've been talking about for going on a year now. We've been talking about the fact that you cannot separate the macroeconomic picture from the picture in the crypto market. That's going to remain true in this analysis today. So everything that we're saying is always with the caveat, and this holds true every video I make. Everything that we say, you have to understand that based on the fact that the economic picture looks different, there is a potential that the crypto market will play out in a different way. But what I'm going to show you today at least puts us in a frame of reference, shows us what these prior cycles looked like and what we're seeing right now. Because quite frankly, there are a lot of similarities, in spite of the fact that, it seems like the world is crumbling all around in terms of the economic picture. The crypto market is playing out in many ways in a very similar pattern to what we've seen in the past. Now, some things are different. Just take the Bitcoin dominance, for instance. By this point in the cycle, we would have seen the Bitcoin dominance much, much higher than we're seeing it right now. Now, the Bitcoin dominance you're hearing a lot of people talk about is, in my opinion, they're giving an inaccurate representation of it because they're including stable coins, and many of them may not even know they're including stable coins in that value. But stable coins are going to remain stable. It's worth $1. And when you have a coin that's always worth $1 and prices are going down of all the other currencies, you're going to see naturally the Bitcoin dominance fall. So when you exclude some of those stable coins, you'll actually find that the Bitcoin dominance is a bit higher than you're hearing people talk about it. And we actually have a free metric that I've released on the Discord channel. You could go there. It's a trading view indicator. It's available for free, as well as all of the other trading view indicators that I release, including the DCA index risk model. With that said, let's do it. Okay, so what we're going to look at is this chart here. So we have the price of Bitcoin as we normally see it, and then you have this pink line. This is the realized price of Bitcoin. And in my opinion, this is one of the most important metrics for this asset class, or any asset class for that matter. It's just that we have this data for Bitcoin and we don't have it for many other cryptocurrencies or the stock market. This would be a game changer if we had this type of information in the stock market, but we don't. Fortunately, for those who are, aware of it and cognizant of this type of data, we do have it for Bitcoin, and it's extremely telling. So what this shows us is the average price at which individuals on the Bitcoin network own the asset. So it looks at each time a Bitcoin moves on the network and it registers that. And we are able to see the total sum, or the aggregate, of all the Bitcoin on the network the last time they moved on the network. So it gives us a very good estimate of what the average price that people own Bitcoin at is. And so we see a very cyclical pattern here that plays out over and over and over again in each market cycle. Now, I made a video, and in fact, this was the first time that I kind of talked about the fact that it was very likely that Bitcoin could go down to $20,000 or even south of $20,000. And we made that video back here in December, back when Bitcoin was still at around 50K, 55K. And we said at that time that if you look, the realized price of Bitcoin is sitting at around 24K. And that sounded absurd to people that Bitcoin could go back to that price. First of all, because you have indoctrination on YouTube where a bunch of people who are either clueless as to, how markets work, or you have people that are purposely lying to you because it drives clicks and views, telling you that, we're never going back down to those prices again. We're never going to 30K. And then when we got to 30K, we're never going below 30K. We're definitely not going back below 20K. That could never happen. And, sure enough, just like we were saying back then, way back at 55K, that this can definitely happen. And what is the justification for that? Well, when we look at this here, you see that in every single market cycle, we see that after a peak, like we saw back here in 2011, you then get this trough and the price crashes below the average price on the network. Same thing here in 2013 as we shift into 2014 and then into 2015, we go slightly below the realized price. And then yet again here in 2018, and you saw it with the COVID capitulation event, and now you've seen it again. So we are at that place where Bitcoin is below the realized price. As the bear market wears on, you kind of lose the weaker hands. So the people who bought up here at the top start to capitulate, they start to sell, and that drives the price of Bitcoin down. So when you get to these points down here where you're below the average price on the network, you've pretty much driven out almost anyone who's going to sell. What the logic behind this is that when you're below this realized price, that means the entire Bitcoin network on a whole is actually sitting at a loss. So the average coin held on the Bitcoin network is actually unprofitable at the moment from the point at which it was bought. And so that's a point where you're more likely to see a support level form because long term holders, people that have been holding 2, 3, 4 years, they're not going to sell at their cost basis. In fact, those people, what we find is they tend to pick up more. And that will be true across any asset. That's not unique to Bitcoin. People that have long term confidence in an asset don't just sell after they've already held through all these rocky times. So what we find is that when you get down to these levels, you kind of form a support level because you run into a supply shock. And that's just, that makes sense. When we see that the percentage of the coins held by short-term holders falls further and further and further, it means all you're left with are people who have been holding through all of the rocky times. They've been there through the ups, they've been there through the downs, and they haven't sold. So that's kind of where we're at right now. Now, as we always say, it may be easy for those people to hold back here in 2015 or here in 2011 or here in 2019 when the economy is doing, rather well overall, when it doesn't seem like there's economic crisis that could be potentially brewing in the background. So that raises the question, are the unique challenges facing the economy going to sort of change the dynamics and actually cause some of these longer term holders to sell? And that's the question we'll face. But it's important to at least recognize the fact that in spite of that, what we've seen in the past, what we're witnessing right now is a pattern nearly identical to the market cycle bottoms that we've seen in every cycle, where we kind of crash below this level and then you see the asset kind of waver back and forth where we kind of hit this realized price as a resistance level, but we don't go too much further down from that point. We've kind of hit that shock. We've hit that capitulation event that drove us below. And in this case, that would be the Luna UST event. So we get driven down below, and now we're kind of just sitting right below the level, just like we have in prior market cycles. So everything that we're witnessing right now so far is par for the course, really. And, nothing very unique has happened. I mean, if you just come back here and look back in 2017, We crash down, we stay above this realized price. We form this consolidation here, and then we crash below it as a large institutional or a few institutional investors sold right here. Then the same thing happens here. Luna, UST, the Luna Foundation Guard, they were forced to liquidate their Bitcoin. That sends this whole cascade of liquidations in the Bitcoin network, and we see us crash below the realized price. And you'll notice that right when we did that, that's kind of where we sort of leveled out and just kind of went sideways. And we're doing the exact same thing now. So the difference now is the fact that the economy as a whole is putting the network at risk to experience a new pattern where we see long-term holders selling. So we haven't really seen that yet. And we've talked about that in our last video, that we're not seeing these long-term holders selling yet, but that potential risk is there. And that's just something that we have to be cognizant of. We don't want to, just because it doesn't fit the narrative or it doesn't, it's not what we want to happen, we can't ignore it and just say it's not going to happen. I think at some point we have to realize that is YouTube over the last 6 to 8 months should have taught everyone at this point that is an ineffective way to approach a market. Because when you have some guy sitting in his basement telling you this can't happen, this Bitcoin's only going up, we're never going below 30K, we're never going below 20K, that guy typically doesn't know what the hell he's talking about. And that's the bottom line, right? They tend to be the most popular people because they're shilling a narrative and narrative sell. But at the end of the day, those guys have gotten a lot of people wrecked because they ignore the clear and present risks in the market. So we can be aware of the fact that this looks a lot like everything that we would expect it to look like, where we're down at these levels and we're consolidating. And that's a good sign. But we also have to look at the fact, what the economy is telling us, and at least understand that this isn't we can't take this to the bank that we're at the bottom just because it looks like it's looked in the past. We have to appreciate the fact that things could potentially be different right now. Doesn't mean you need to run to your Binance account and panic sell, but you have to make the decision for yourself what degree of risk you're willing to take right now, given the data that we see here. Okay, guys, so I'm going to wrap this one up here. I've actually broken this one up into 2 parts. And in the next video, what we're going to do is increase the resolution of what we're looking at here. And we're going to look at the difference between the realized price for long-term holders and short-term holders. Because what that actually shows us is very unique, and I think it says a lot about specifically where we're at right now. Because remember, when we can then segregate this individual line, which kind of lumps everyone together, into just the long-term holders and the short-term holders, we can really see what's going on in the network, and we can see where the selling is coming from. And we can see kind of how the long-term holders are reacting to what's going on right now in the macro environment, what's going on right now in the Bitcoin network. And we're going to dive into this deeper in the next video we do. So if you guys like this type of content, hit like and subscribe. Stick around for the next one. That'll probably come out tomorrow. And until next time, as usual, see ya.